Good afternoon, everyone, and welcome to Stock Market Today, the final Stock Market Today video of 2022. On today's show, we'll talk about well, not such a bad close for the market. It was looking rough there for a little while, but we did manage to close well off lows. And I didn't mention that I'm joined today by Ed Carson, our news editor. So yeah, well, let's get right to it. Not such a bad close. It was looking ugly there for a little while, but we did manage to close nicely off lows. Ed, as usual, has found three stocks for us to watch. And Ed, why don't you give us the deets?
Yeah, three stocks from a variety of different sectors and sort of different kind of themes in terms of growth. But Celsius, Deere, and Biomarin are all acting fairly well as we head into the new year.
Very good. All right. Well, why don't we just get right to the indexes here? And NASDAQ, was under some selling pressure early in the session, but it did close well off lows. Only a loss of 0.1%. Ed, we're leaving 2022. We've been talking about the technical challenges for the market, and we had a nice up day for the NASDAQ yesterday. A little bit of selling today, but it seems to me the market is still challenged headed into 2023. We're going to keep our hopes up for a good start to the year, but there's still a lot of challenges out there.
Absolutely. And just to sort of recap, we started the week with the market rally under pressure, and a lot of pressure, and it was definitely not a market you wanted to be doing a whole lot in. On Wednesday, came down sharply. The NASDAQ had actually hit its lowest close in 2 years. The S&P was well below the 50-day line. The Dow Jones even fell below the 50-day line. We did bounce back on Thursday, so that marks the day one of a rally attempt. But maybe a few days into 2023, we can get a follow-through day. A little too soon to be talking about that, though. I think Friday's jobs report will be something you definitely want to underline. But here we are. I mean, it's like we've had these times for quite a while, like 1 days here and there, and even when we had a true market rally, it was tricky. And looking back, it was a grim 2022, especially for the NASDAQ and growth stocks. I think all the major indexes had their best close on the first day of the year, and really things didn't get better from there. And still waiting for that to turn around.
Yeah, I mean the market really. We've been talking about this wall of worry, and this is quite a tall wall that we're still, dealing with here. It was, inflation a big concern all year. Inflation still a concern. A very hawkish Fed. I was looking at that. Hard to believe that the 10-year Treasury yield started the year at 1.5%, and now it is all the way up at around 3.88%. So very aggressive rate hikes by the Fed, and then you had a lot of geopolitical concerns going on with big slowdown in China. I remember the market used to freak out when there was talk that China's GDP growth was slowing down to 4 to 3%, and what impact that would have, and the contagion and all that. But just so many headlines that the market is dealing with right now. Let's switch over to the S&P 500. That too closed off lows and turned in a pretty good performance, maybe down 0.2%, 0.3%, but similar to the NASDAQ, below these moving averages due to recent signs of institutional selling. It's in a correction. Not sure what else to say here. It's just gonna. It seems like a long way to go to get to those moving averages and then back to the 4,000 level.
Yeah, so even if you get a follow-through day, then the 50-day line maybe will coincide with a follow-through day. Perhaps, let's say everything works smoothly. That's assuming it's near term. There'd still be the 4,000 level, the 200-day line, and these December highs. And then just to pick up on when you were talking about all the geopolitical issues, there's still a lot of those issues out there. We still don't. The Fed isn't quite done yet. It seems to be closer to the end, but the concern is that the Fed will keep going until the economy goes deep into a recession. The jury's still out on that, but it's a lot of worry. So the next few weeks going to be very important to see how that goes. Yeah, we're still, China finally is ending its zero COVID policy, but that's having now an unprecedented COVID wave in the next few weeks.
Spike in COVID cases
and a real spike. A few months ago, a spike in COVID cases was 40 announced cases in a city. Now it may be tens of millions in a day. I mean, it is enormous. So something to watch out for. Just a lot of uncertainty. Now, maybe if we get some clarity, and that clarity is fairly positive, we could have a good year. I think the question is you just have to wait. It was, as Charles Harris said on IBD Live today, It was a stay away year. It's still a stay away market, but you want to stay on the sidelines, not run away from paying attention.
Yeah, I don't have a final tally for the year-to-date losses for the indexes, but I can tell you the Nasdaq that we just looked at was down about 34% for the year. S&P 500 down in that 20% range. Let's go to the Dow, which held up pretty well relative to the S&P 500 and Nasdaq. At last check, its year-to-date decline was about 9.5%, and it fell sharply. Earlier today, but a close near highs, still battling near the 50-day moving average here.
Yeah, this 50-day, 21-day line is sort of an interesting area. I think it may have closed just below it. This is a little bit off, but it's just fractionally below that. But if this was what the S&P and Nasdaq looked, wouldn't be so unhappy. This would be not so bad. And there's definitely areas of the market, industrials, some other areas, medicals, infrastructure stocks that the Dow is more representative of that look a little better.
Yeah, and that may be an area to stay in as we head into 2023. I mean, what is your growth stocks? Obviously, such a difficult year in 2022. It's hard to see things. Looking out into 2023. What is your take on tech? It's still a sector that should be avoided. What are the possibilities that we see some sort of turnaround next year?
Yeah, I mean, one of the issues is that our earnings estimates down enough? Are they going to cut them? Because we're going to get earnings season in a few weeks. So it'll be interesting to see what some of these companies do. So if the economy starts straightening up, there will be opportunities. I think growth will have new opportunities at some point this year, but it doesn't seem like right away. I mean, with a few isolated cases, there's not going to be. There doesn't seem like growth is there. But the thing is that I would not have predicted 2022. I would not have predicted how the growth stocks had such a terrible year. So maybe this will end up being a magnificent year. The key is that you don't want to do too much forecasting or trying to guess with it. You want to be trying to just pay attention to what the market is doing now. And right now, the market's saying don't do a whole lot with growth.
Exactly. All right. Well, let's start. We'll finish up with the Russell 2000 IWM, the Russell 2000 ETF. This one also rallied off lows. All in all, not such a bad day for the market. Like I said, it was not looking good there. Looking like we were going to end the year with a thud. But small caps also closed off lows, and just a minimal decline for the Russell 2000. Some ETFs I know we want to take a look at. Mention that first of all, the 10-year Treasury yield. The yield story, yields have run up quite a bit. That 0 TNX chart still holding above its 50-day moving average. Bond yields up a little bit today, and markets performance pretty impressive. It seems like the yields were going up, and stocks paired losses. But this will certainly be a focal point in 2023 as well, Ed.
Yeah, and it's less of a link maybe now. It's still there, but it's less of a link between rising bond yields, lower stock prices, because this is somewhat a recession risk concern, especially at the 10-year as we go forward. So actually, to some extent, the rising yield isn't necessarily a death sentence for stocks, but yeah, this is definitely bond prices had a terrible year. As bad as stocks did, bonds were just bonds you think of something as safe, but actually owning bonds, those were, generally did terribly in 2022.
Yeah, like I said, that was a huge move in the 10-year yield this year from 1.5% all the way up to its current level, right around 3.88%. Best performing S&P 500 sector this year would be the XLE oil and gas stocks. We'll see if they're going to be able to continue their leadership in 2023, but XLE, I know at last check was up some more than 55% this year, but here it is, kind of fell below the 10-week moving average, and now we'll see if this ends up being resistance level. Can sometimes happen and can presage lower prices.
Yeah, I mean, this is really riding on oil and natural gas prices. Natural gas terrible last few weeks. The oil prices have risen in the last 3 weeks.
All right, healthcare ETF XLV. I know we've been talking about this one a little bit. Still in a pretty good setup here. If we switch over to the daily chart, you can see this one came down and touched the 50-day moving average today, closed up near highs. So a lot of people saying that healthcare is still an area to keep an eye on. It's a big sector filled with all different types of companies, but you can put biotech stocks in the healthcare sector. Talked about several of those was on IBD Live earlier today. We'll take a look at one in a little bit, but XLV might not be a bad place in 2023.
Defensive growth that isn't so dependent on the economy. That's a pretty enticing situation when the economy is in such flux.
Yeah, and then semiconductor stocks via the SMH, very very tough year for tech stocks, and this is kind of ending the year just like looking like the Nasdaq chart and the S&P 500 chart. Will remains to be seen if chip stocks are going to be able to exert some sort of leadership, maybe in the second half of 2023. But right now, just very, very lots of oversupply in the chip sector, and a lot of stocks so far off their highs. It's going to take some time to recover, most likely.
Yeah, I mean, if you want to see if this could get rebound, not necessarily be a real super leader, but just participate in a rally like it looked like it was doing here, that would be a positive sign for the rally. So this was probably one of the most negative to me parts of the last few weeks, was this coming down. So definitely keep an eye on the chips.
Okay, and then some, IGV. This is sort of your software benchmark ETF that holds a lot of cloud computing companies that have just been really beaten up. And here again, an ETF that is in such a downtrend. Really, for this to break out of its downtrend, it's going to have to get back above its 40-week moving average right there. But this one's still looking tired, and a lot of people hoping we'll see some strength in this ETF in 2023, but still. Still a lot of cloudiness in this sector as well.
Yeah, I think earnings outlooks are going to be really key. You're going to find out how many businesses are cutting back on software. I mean, with their new spending, and software woes were probably worse than this, because a lot of this is Microsoft is a big name that definitely had a bad year, but not nearly like some of the really big speculative growth names that aren't represented here or are relatively minor.
And then Kathy Wood's ARK ETF ARKK. Rough year as well. This one probably looks the worst. How far is that off its high? Almost 70%
for this year, and versus then, it's probably more like 80% plus, and it's at a 5-year low. I mean, this came right back down. So to go below the COVID lows. So,
Well, looking at some of these ETFs, especially ARK and IGV and SMH, maybe a lot of bad news has been priced into the technology sector. I know some people maybe aren't holding their breath about that, but like Charles Harris said this morning on IBD Live, there's been a lot of destruction in the market, and there's also a lot of negativity out there, and people being very bearish about 2023. So I guess you have to always be prepared for the market to start a rally when it's least expected, and you have to be open to really any scenario. So we'll keep our fingers crossed for a good start to the year, but we know that there are still quite a bit of challenges for the market. All right, well, let's take a look at some individual stocks here, starting off with Celsius, CELH. And this is kind of a rarity in the market because it's a growth stock, high multiple stock that is still fighting a good fight at its 50-day moving average. And some people are saying this one still has the potential in a tough environment for stocks like this. This could have potential in 2023.
It has potential, and just have to remember, we're talking a lot of setups out there, and most setups haven't worked in the last few months. So just because the stock is setting up doesn't mean it's going to go and work. But it moved out here earlier, and it came up and did pretty well when the market was a little bit more strength, but pulled back. But nice support here at the 50-day line. I think this was pretty nice action. Now it's not extended from the 50-day line. I think there may be a move above the 21-day line, and maybe above this day here. Getting above that level would be still pretty close to the 50-day line, but breaking a trend line, still a relatively early entry. Again, you have to put in well, go ahead.
No, I was just going to say volume picked up quite a bit from recent sessions too. So, low volume time for the market, but good up day and heavy volume. Sorry to interrupt you there.
No, and it was just keep in mind, it's like in the context of the market. I mean, the stocks like this stock and some other stocks, they look good and they might flash buy signals, in the coming days, but that doesn't necessarily mean you have to jump in. And if you do jump in, don't jump in, just sort of step in, tiptoe in, small positions, and ready to back out again.
Yeah, I mean, I think we can all relate to buying buying stocks in a down market that have good technical setups. It is a pretty easy way to get cut up because you might feel good one day that your entry was good, and then before you know it, you're down 2 or 3% because the market is selling off again, and it's easy to get chopped up in a market like this. So learning to be patient and sit on your hands is a great skill to learn. All right, let's take a look at Deere, which is ticker DE. Another stock that is showing it could have the muster to be a leader in 2023. This is a stock that gapped up on earnings. It has moved sideways above its 50-day moving average, and really showing pretty good technical action here.
Yeah, really tight action on a weekly chart. Actually had a 3 weeks tight. It did pull back a little bit more, but not much. Found support at the 10-week line. This is 1, 2, 3, 4, 5 weeks now on a weekly chart. So in an hour or two, MarketSmith will show this as a flat base. And a pretty tight one. There's definitely a lot of stocks in the machinery, construction area that are doing well. A lot of them with flat bases showing this kind of action. I suppose a move over the 21-day line or maybe a trend line that comes over here might offer an early entry that would still be pretty close to the 50-day and especially the 10-week line.
Yeah, Deere is a leaderboard stock. I think we only have six stocks in the model portfolio right now. We've been up as high as 14, 15, but still have a pretty healthy cash position on leaderboard. Deere is still a holding, so we're optimistic it'll be a good 2023 for Deere. All right, finally mentioned this morning a lot of good setups in the biotech space, an area of the market where there's a lot of innovation. There are a lot of unprofitable, highly speculative story biotech stocks, and then there are stocks like Biomarin that have been profitable for several years, and they also have pretty good technical patterns as well. So BMRN, definitely a biotech to watch next year.
Yeah, I like a few things here. This is one that you brought up this morning on IBD Live, and I thought, yeah, that's a pretty interesting looking chart. Finding support at the 21-day line, pulling back after gapping up. Again, it's holding the bulk of its gains, much like Deere has done. You could, see something as an, early move, like if it showed any more strength next week. You might just instead wait and say, you know what, I'm going to see if it forges a base over the next few weeks, or forges, or pulls back to a rising 10-week line. It's still a bit above that, but a couple more weeks from here, you might be getting a lot closer. So this is definitely one to watch. I really like the growth. I mean, a lot of companies are showing negligible growth next year, or outright declines for so-called growth stocks. This one really is expected to see booming earnings next year.
Yeah, BMRN's got a pretty compelling pipeline in the area of hemophilia. In fact, when the stock broke out of this kind of double bottom pattern several weeks ago, it was positive news from the FDA about an experimental hemophilia A treatment that is moving nicely through the FDA. So there's optimism about that pipeline. So I'm next week, following week, we'll continue to have a lot of biotech coverage. Allison Gatlin does a fantastic job for us in this space. So BMRN, stock to watch. All right, Ed, just closing thoughts on 2022 and 2023. We don't know what the month of January is gonna bring. We can stay optimistic that it's going to be a good month, but we also, again, have to acknowledge, there's still a lot of challenges out there for the market, and even if the Fed does, start to slow its interest rates, and maybe the Fed funds rate ends between 5 and 5.25%, something like that, it could stay there for a while before the Fed believes that they're truly ready to pivot and start cutting rates. So it seems like the Fed is still going to be a focal point.
Going to be a focal point, and it could go back and forth over the next few weeks. It might feel like things are moving forward and then pulling back. So even if things start to trend higher, it could go back to that choppy uptrend that we had in October, November. But the thing is, there are a lot of stocks that are setting up there. They haven't done particularly well, but there've been a lot of setups, and there still are a lot of stocks that are right by buy points or near buy points, or working on new consolidation. So if the market does turn around, you could see a number of stocks quickly move out. So you want to stay engaged. You don't want to be checking out and just saying, well, the market wasn't doing well, I'll wait till I know the market, till the market gets towards all-time highs. No, if the market does start moving and starts clearing some of these technical hurdles, a lot of stocks are going to be moving out, and you don't want to miss out. Again, that may not happen, but you want to be ready, building those watch lists. Hope everyone has a nice, refreshing New Year's, so they come back to the new year sort of with a new mindset. Sort of wiping the slate clean and looking forward.
Absolutely, that's a good way to look at it. Yeah, I mentioned on the leaderboard on the leaders list we have 6 stocks. We actually have 7 stocks now on the watch list. So we've been kind of filling out the watch list. I'm sure that's going to expand as well. So we'll be ready when the market does turn. It's still a risky environment out there, even though we did get a decent close today. So just a reminder, the stock market will be closed Monday in observance of the New Year's holiday. So it'll be a shortened week of trading. And Ed, that shortened week of trading next week does have the jobs report on Friday, correct?
Yeah, so
Yeah.
jobs report and a bunch of other stuff. So it's going to be an important week.
Yep. So we have that to look forward to. Shortened week of trading. Again, I want to wish everybody a very, very happy New Year, safe, healthy, and hope it's a profitable 2023. Until then, Allie, looking forward to seeing Allie next week. She'll be back in the SMT hosting chair. Ed, happy New Year to you and your family, and we will see you back here on Tuesday.